So, Mike, before we talk about how this was litigated, give us a sense of just the context in which this claim moved forward.
Yes, Sam, and thanks for having me on. But this all related to the Puerto Rico bond market, which in 2013 suffered or began to suffer a collapse, and related specifically to a couple of types of products that were sold by firms down in Puerto Rico and even some firms on the mainland. But specifically in this case, it was UBS who had underwrote literally billions and billions and billions of dollars of these bonds, and encouraged public entities, public corporations down in Puerto Rico to continue issuing these bonds at a dangerous rate, and more specifically beyond the bonds, a lot of proprietary products. And these came in the form of closed-end funds, which really served as a wrapper under which UBS could wrap up the bonds that it underwrote into a product that it then sold to regular retirees, regular mom and pop investors, and it sold them by the boatloads, by the truckloads. It backed them up and sold them to anyone and everyone there, retirees, people with very small net worths, people with large net worths. It was a profit center for them, and they sold these bonds and these funds for years and made a lot of money doing so. But then in 2013 and in 2015-16, as Puerto Rico's situation deteriorated, these funds and the bonds suffered significant losses, and folks who had the retirement assets invested in these types of risky products suffered huge, just terrible losses.
Okay, I need you to go. We're going to back up just a little bit here. So, clearly what we're talking about is some measure of, a fraudulent representation of the quality of these bonds. It appears, and you'll tell me if I'm right, but just walk us through what it was. So they're underwriting bonds on behalf of municipalities, and what is involved with the underwriting? Just essentially helping them take them to market?
That's exactly right, Sam. You can. There's other things that are involved with it, but at the end of the day, underwriting a bond is really, you're just giving them an avenue to actually take the bonds to the market, and more importantly, and perhaps this is most important in this case, actually sell the bonds. Because you can underwrite a bond, but if you can't sell it to somebody, if you don't have a customer to sell it to, then it doesn't do you any good. And that's what one of the big things that UBS brought to the table in this business was. They had, especially in Puerto Rico, they had 50% of the retail customer base on the entire island. So they had access to the clients, and in underwriting these bonds, they did help bring them to market and then actually distribute these bonds.
And you mentioned they wrapped them up in something. Walk us through what that means in layperson's terms.
Sure, that was just, it gave them a little bucket to put these things into, and it's specifically was a closed-end fund, and closed-end funds operate a little bit differently. People are probably generally familiar with, say, a mutual fund, and these are like a mutual fund, but they're a little bit different. These don't trade on the New York Stock Exchange. These aren't regulated in the same way. These can use leverage, and leverage is just a form of, think of that as borrowing. So when you bought $1 of one of these funds, what they were able to do by creating it as a closed-end fund, they borrowed against that and purchased another dollar. So every dollar you put into one of these products, they were able to get rid of essentially $2 worth of the securities that they needed to get rid of, or dump, if you will.
Wow. Okay. And so ultimately, so they're going out, and sounds like one of those situations where they have the clients and they create a product in a market because they have this captive audience without really being too concerned about what the quality of that product is, but just relying on their ability to sell them because they have a direct line to them.
Yeah, I think that's actually a pretty fair assessment of what it is, because especially when you looked at it and you start getting into some of the quality of these bonds, and certainly there's arguments about some of these, Sam, that can be had. I mean, we could have a discussion about some of the clawback features or the priority features on some of these bonds, but some of these bonds were honestly a joke. I mean, there were literally moral obligation bonds that were being sold to folks, and those are worse than they even sound. It's like an IOU. It has no guarantee, no backing, no security interest. And the way these are able to get passed along to clients is by having people there who stand to gain significant money from underwriting fees, from commissions, from management fees, really kind of collecting at every level in the sales process.
So what exactly, I mean, so they're selling, they're basically underwriting these loans, and they're taking them to market as financial securities. What were these under? I mean, you say some were just moral obligations. In other words, there was no legal way of compelling repayment. And for these securities, I mean, just walk us through what people normally expect when you buy a bond. I mean, it's theoretically, right? It's a safe investment because, well, theoretically, many times, depending on the quality of the bond. But what do people normally expect when they go and buy a bond? Like, how does that work?
You took the word out of my mouth. That's what people think. People think I'm not investing in options. I'm not investing in an IPO of a company or even a stock. You're buying a bond. And the word that I think a lot of people, the normal, regular people think, well, the bond is safe. That's the thing. It's maybe not going to give you a 10% return, obviously, but it's going to give you some security. And that's why it was so easy for them to sell these products, because you're selling a bond. You're selling a bond, and they sold it as a bond that's either backed by something or it's guaranteed by something, and it's easy to sell it as secure. So someone who's in their 70s or 80s is thinking that they're buying this for their retirement, and that the principal is going to be safe. And that's what I think the average person who's going and investing thinks, that if you're going and buying bonds, that it is something that's going to be safe and secure, and that you'll make some income on it for your retirement, but not taking a big risk, not reaching for the stars, or not trying to hit a grand slam and knock it out of the park. I mean, you're talking bonds here, which is what, again, made it so easy for them.
And okay, so there's this expectation that they are lending, I guess, a municipality money. I mean, are these all municipal bonds? What kind of bonds are they?
Yeah, so primarily municipal bonds. There's sales tax financing bonds. There's pension obligation bonds. There's a lot of different types of bonds. Some are general obligation bonds of the government of Puerto Rico. So there's quite a few issuers down there. Essentially the central bank, the government development bank in Puerto Rico, also offer bonds. So there's a lot of different ones involved, and of course there was just primarily concentrated in just a few of these particular issuers, which is one of the other problems which led to even more severe losses. The more you concentrate a portfolio, the more risk you're exposing it to.
Okay, so UBS underwrites these bonds from different municipalities. People assume that they are safe, and that by purchasing these bonds, they are basically locking in a fairly reliable source of income that will not necessarily, make them Mega Millions winners, but will provide a safe and secure income for people who probably need it the most, in terms of that safety in knowing that this money will be coming in over a certain period of time. Michael, I want to take a break. When we come back, I want to hear about who the clients are and what happened to them that instigated these lawsuits against UBS, and what it is ultimately UBS was found to have done that made them liable for this $20 million arbitration award over these Puerto Rican investments. We got to take a quick break. I'm Sam Seder. This is Ring of Fire Radio. We'll be right back in just a moment with Michael Bixby.